2. You open your renewal notice expecting the usual small increase, maybe 2%, maybe 3%. Instead, your jaw drops. Your car insurance went up 40%. You have no accidents, no tickets, no new drivers, no claims. Nothing changed. So why are you being punished? And more importantly, what can you do about it right now? By the end of this video, you will understand the 3 hidden forces that caused your rate hike. You will learn exactly which part of your policy got more expensive and why. And I will give you a 4-step script to call your insurer and reverse at least half of that increase. This is not about switching companies blindly. This is about knowing the game so you can win. Let me start with the most infuriating truth in auto insurance. You are paying for other people's bad behavior. That is not an opinion. That is how the system works. Insurance is a pool. Everyone pays in. The company pays out claims. When claims across the entire pool go up, everyone's rates go up. Even you, even with a perfect record. In the last 2 years, accident severity has skyrocketed. Cars cost more to repair. Medical bills are higher. Lawsuits are bigger. And all of that lands on your renewal notice. But that is only part of the story. There are 3 specific drivers of your 40% increase. Let me break down each one. The first driver is repair costs. Modern cars are rolling computers. A minor fender bender that used to cost $1,000 to fix now costs $3,000 because of sensors, cameras, and calibration. Windshields with rain sensors and heads-up displays cost over $1,000 to replace. LED headlight assemblies can cost $2,000 each. Insurers pay these bills, then raise everyone's premiums to cover the losses. If you drive a car from 2015 or newer, you are in this higher cost bucket. Even if you never file a claim, your rate goes up because your car model is statistically more expensive to repair. Here is a real example. In 2019, the average auto claim was about $3,000. In 2024, the same type of claim averaged over $5,000. That is a 60% increase in claim costs. Insurers did not absorb that. They passed it directly to you. So a 40% rate increase is actually lower than the rise in claim costs in many regions. That does not make it fair, but it explains why it happened. The second driver is medical and legal inflation. When someone is injured in a car accident, the cost of hospital stays, surgeries, and rehabilitation has gone up 30% in 3 years. Ambulance rides alone have doubled in some cities. And here is the kicker. Lawsuits are bigger. Juries are awarding higher amounts for pain and suffering. In the U.S., nuclear verdicts over $10 million have become common. Insurers price for that risk years in advance. So your 2023 to 2024 increase reflects claims that happened in 2021 and 2022. You are paying for lawsuits that have nothing to do with you. Now, here is where it gets interesting. The third driver is something called loss trends by zip code. Insurers do not just look at your personal driving record. They look at everyone in your area. If your zip code has seen more thefts, more hit and runs, more uninsured drivers, or more severe weather, claims like hail and flooding, your rate goes up. You might live in a safe neighborhood, but the insurance company looks at the entire postal code. If 3 blocks away there is a high theft area, you pay for it. I have seen rates double in certain Toronto zip codes because of auto theft. Same in Birmingham and Los Angeles. The driver with a locked garage and a steering wheel lock pays the same higher rate as the driver who parks on the street. That stings, but it is legal. Let me give you a specific country-by-country breakdown. In the U.S., your rate increase is largely driven by repair costs and nuclear verdicts. States like Florida, Louisiana, and New York have seen average increases of 30 to 50% even for clean drivers. In the UK, The biggest driver is the rise in whiplash claims and the cost of courtesy cars. Even after the whiplash reform rules, insurers are still paying out more. In Canada, auto theft is the #1 culprit. The government has declared auto theft a national crisis. Insurers have raised rates across the board, especially for Honda CR-Vs, Toyota Highlanders, and Ford F-150s. If you drive any of those, your increase might be even higher than 40%. Now you are probably wondering, if I have no control over these three drivers, what can I actually do? Plenty. And most of it takes less than 30 minutes. Here is your 4-step action plan. Step 1. Do not accept the renewal notice as final. That number is a starting point, not a conclusion. Call your insurer and ask for a loyalty discount. I know that sounds naive, but many companies have hidden retention discounts that they only give to customers who ask. Say this exactly: I received my renewal with a 40% increase. I have had no accidents or claims. Can you apply any loyalty discount to bring my rate closer to last year's premium? Sometimes they find 10 to 15% on the spot. Step 2. Adjust your coverage to match current reality. Your car is 1 year older. Its value has dropped. If you have collision and comprehensive coverage, check your car's current market value. If it is under $5,000, drop both coverages. That alone can cut your premium by 30 to 40%. If you have gap insurance, you probably no longer need it if you owe less than the car is worth. If you have rental reimbursement but also have a second car or good public transit, drop it. These small changes add up. Step 3. Raise your deductibles strategically. If your comprehensive deductible is $250, raise it to $500. If your collision deductible is $500, raise it to $1,000. For each $250 increase, you typically save 10 to 15% on that portion of the premium. Do this only if you have the cash in savings. But if you do, it is a direct trade. Lower premium for higher potential out-of-pocket. Now here is the pattern interrupt that most agents will never tell you. Step 4 is the most powerful. Shop your policy immediately. Do not wait until the renewal effective date. Get quotes from 3 competitors using the exact same coverages and deductibles. Use comparison sites like the Zebra, Insurance Hotline, or Confused.com. You will likely find a company offering a rate close to your old premium. Why? Because different insurers have different loss trends in different zip codes. One company might have had a bad year for theft in your area and is raising rates aggressively. Another company might have had a good year and is trying to gain market share with lower rates. Switching is often the fastest way to undo a 40% increase. Let me give you a real-world example. My neighbor in Chicago had Geico for 5 years. Clean record, no accidents. His renewal went from $120 to $168 per month. That is a 40% increase. He called Geico. They offered a 5% loyalty discount. That brought it to $160. Then he got quotes. Progressive offered the same coverage for $125. State Farm offered $130. He switched to Progressive. His rate went back down to $125. The whole process took 45 minutes. He saved over $500 a year. But wait, there is another hidden factor that might be causing your increase that has nothing to do with claims or theft. It is called insurance score recalculations. Every time your policy renews, the insurer pulls a fresh insurance credit score. In the US and Canada, if your credit utilization went up, if you opened a new credit card, if you missed a payment on anything, your insurance score might have dropped. Even if your credit score stayed the same, the insurance scoring model changes. So part of your 40% increase could be a credit ding. Check your credit report for free. If you find errors, dispute them. If your score dropped legitimately, work on paying down balances. Then call your insurer and ask for a re-rating. They can use an updated score mid-term. Now let me talk about the one group of people who should not shop around immediately. If you have accident forgiveness or vanishing deductible that is about to vest, or if you have a long-term loyalty discount that increases every year, you might want to stay. But here is the test. Calculate how much you would save by switching. If it is more than your accumulated benefit, switch. If it is less, stay. Most people overvalue loyalty perks. A vanishing deductibles saves you maybe $200 after 5 years. Switching saves you $400 this year. Do the math. Let me also address the UK and Canadian specific options. In the UK, if your insurance went up significantly, check your occupation and your annual mileage on the renewal document. Insurers often auto-inflate mileage estimates. Correcting 10,000 miles to 5,000 can drop your premium by 15%. Also, add a named driver with a good record like a parent or spouse, even if they rarely drive. That can lower your rate because it spreads risk. In Canada, check if your insurer has a winter tire discount. Many do. If you have winter tires, you can save 5%. Also, if you are a member of CAA, a professional association, or a university alumni group, you might qualify for a group rate. Ask, "Now let me give you a sample script to use on the phone today." Say this: "Hello, I am calling about my renewal notice. My premium increased by 40%, but I have had no accidents, tickets, or claims. Can you please explain the specific reason for this increase?" Then listen. They will say something about market conditions or claims costs. Then you say, "I understand. However, I have received a competitive quote for my previous rate. Can you match it or offer a retention discount?" If they say no, say, "Please cancel my policy effective on the renewal date." Then switch. Do not be emotional. It is a business transaction. Now let me recap the key takeaways from this video. Number 1. Your rate went up because of factors outside your control. Rising repair costs, medical inflation, larger lawsuits, and local theft or weather trends. Number 2. Insurers do not reward loyalty. They reward shopping. Number 3. Call your current insurer and ask for a loyalty discount or retention offer. Number 4. Adjust your coverage by dropping collision on old cars and raising deductibles. Number 5. Shop 3 competitors before renewing. Number 6. Check your insurance credit score in the US and Canada. Number 7. Correct your mileage and add a named driver in the UK. Number 8. Never accept the first renewal notice as final. Here is what I want you to do right now. Open your renewal notice. Look at the percentage increase. If it is over 20%, bookmark this video and set an hour on your calendar for tomorrow. Then go to one comparison site and run a quote using the exact same coverages. Write down the lowest offer. Then call your current insurer. You could lower your payment before the end of the week. If this video helped you understand why your insurance went up, hit the like button. It helps more people realize they are not alone. Subscribe and turn on notifications so you do not miss my next video. That video is called The One Loophole that lowers your car insurance by 30%, regardless of your record. You will not believe it is legal, and comment below. What percentage did your last car insurance renewal go up? Write your number and your country. I will reply with the one specific action you should take first. Thanks for watching. Now go fight that rate hike. See you in the next one.